All right, in less than 2 weeks, Election Day will be upon us. And regardless of who you support, for many voters, the economy is driving their decision. So the big question remains, does it matter who's sitting in the Oval Office when it comes to your money? Safe Harbor Retirement Group President Cory Sickles back with a little perspective in this sponsored segment. I think we'd all use a little perspective, Cory. So good to have you back.
Glad to be here, Robin.
All right, so people, I think on both sides of the aisle, people think like whatever happens in this election, it's do or die when it comes to my money. Like it's going to be either up or down, and they may think it obviously regarding both candidates here. So what are your thoughts overall on how the election impacts our investments?
You know, I think what a lot of people think, it's very emotional right now. If you go back over, I'm just going to say the last 8 years, it's been very emotional when people were actually casting their vote.
Yeah.
And people think that if their person doesn't win, that, you know, the market's just going to go down, the economy's going to go, you know, off. But if you go back and you look in 2016, if you would have been out of the market went up, you know, with Trump. And then when Biden came in, the market's been up as well.
Yeah.
So, you know, at the end of the day, it's a long-term perspective. And if you work with an advisor, we're going to take all this emotion stuff out of it for you.
Right. And like you said, I mean, historically, it hasn't made that big of a difference. There hasn't been a time when it's just gone off a landslide, right? Either or kind of based on who's sitting in the Oval Office. It's based on other factors. So what should we do then as an investor? Like, what are some steps that we maybe should take when the election is over?
Well, first part is you want to take the emotion out of it.
Okay.
Right? I mean, you really do. Don't let your money or don't let your emotions dictate on how you want to invest. You know, one thing I'll just kind of talk about real briefly with this is if you go back all the way back to 1928 and you look at how the market has performed, whether who's been president or not, it's all pretty close together. You know, and I know they're going to show a slide on there, but, you know, it's right around 14% except for with one party, and it's around 7%. So the market has always gone up. Okay. The second part of it is this. Again, think long term. So if you look at the market, say you invested $10,000 in 1953. If you had invested only when Republicans were in office, you would have made $80,000. That 10,000 turns into 80. Okay. If you would have done it only for Democrats, it would have been $220,000. If you would have stayed in the market, just in general, it's $1.9 million.
Woo, okay. So I'll take that chunk of change.
Exactly right. So the whole point of it is you have to stay in the market. It's not about when you get in and get out. It's how long you're in the market.
Okay, so then anything involving risk, because I know that's the area too that people tend to kind of say, should I not be as risky? Should I pull back when it comes to the markets? Is there any advice on that?
Yes, what I would recommend is we got to find what's comfortable for you. There's nothing wrong with, you know, getting a little less risky. Maybe you are worried about it, who's going to win, but you just don't want to get out. You always want to be able to have that long-term growth because you're going to need that compound interest. And the other part of it is, you know, if you get out of the market, when do you get back in? Yeah, right. You're going to get back in when everything's been going great, and then you've already lost all that upside. And then the odds are when you get in, it's going to go down.
Yeah, right. I'll tell you one thing that's not going to go down because I've learned this from you over the past years, taxes. So should our approach to that change at all?
Yeah, so I think we're talking more about, you know, president, whoever's going to be president might have things they might want to try to be able to be passed. Yeah, right. So if you're working with an advisor, we're going to be able to keep track of the taxes changes, if there are any. And then we're going to be able to assist you on maybe to make some moves. Taxes are always a big play, right? Because, you know, it's not what you make, it's what you keep. And if you can be diverse, not only from your investments, from a tax perspective, by having Roth IRAs and being able to just have like brokerage accounts, not money and always in your IRAs, you're going to be in a better situation long term as well.
And Cory, I think the fact that a lot of people can't take the emotion out of it is why they should like reach out and have somebody look at this kind of stuff, especially if you are nervous about it, right? Because you can sit back and kind of just look at it, you know, from that perspective.
Correct. I mean, here's what I would probably say. When you work with an advisor, I don't care who wins. Yeah. We're still going to do the right thing for you, right? We're going to be a fiduciary. We're going to manage the money the way that we would want to manage that money. Yeah. And, you know, we might make some decisions based upon policy changes and things like that. But the main part of all this is, I always say, don't let politics dictate your portfolio. Yeah. Right? So don't let politics influence the way you're going to invest. and think of it more long-term, not short-term.
Right. It's 4 years, no matter who
That's
it is,
exactly
right?
right.
And then things change. So, all right, I want to send you, of course, safeharboroh.com and give Cory and his team a call. Complimentary consultations always. So, Cory, thank you.
Thank you, Robin.